Welcome to the next video, which is all about chart patterns. So the learning objectives is for you to understand chart patterns to be able to improve your trading sessions. Also for you to be able to identify whether a chart pattern is bullish or bearish, not just for chart patterns, but for kind of the markets in general. It's to have a good idea, which way these trends are heading, which I talked about in the last video in terms of trend lines and what we're looking for. To start off with these chart patterns, we have the bull flag on the left hand side here, two variations. So the price action, the price has come up. It's found that resistance level where people are closing positions, opening short positions to pull the price back down. So we have that top resistance level. What is then formed is a bit of a channel, and you can see that the price bounces between the resistance and support level before it then actually breaks through the resistance level and continues up. It's a continuation signal, a bull flag, in a upwards momentum. The only difference you can see here really between these two variations is that the channel either comes sideways or it comes a little bit diagonally down before then breaking through the resistance line and continuing up. Just above me here you can see we have a bear flag. Bearing in mind bullish going up, bearish coming down. So visually it's very similar. All that is different is what has happened before this channel is formed. And for a bear flag or a bear pattern, the price has dropped and it first needs to find support before it then moves up to find a new resistance level. And again, this channel is formed. The support is then broken and it continues down. It's again a continuation signal. Here we have the bullish pennant versus the bearish pennant. And again, let's start with the bullish on the left hand side. We have this price shooting up. And if we get to a certain point where positions are closed, contracts are closed, and shorts are opened, so the actual price comes down, where it then finds a support. The difference is a channel is not formed. We have a little bit of a narrowing channel, let's say, where actually the support and the resistance lines here you can see gets narrower, less fluctuations, less volatility, kind of just ready for it to go pop and break through this resistance and continue up. Again, on the right hand side here we have a bearish pennant. And a good way to spot it is you just need to see what has happened before. Where has this price come from? Has it shot up? Are we bullish? Or is it coming down? Is it bearish? So the bearish pennant again finds a support and then bounces between the resistance and the support before continuing down. The ascending and descending wedge are similar, but we have a quite a strong resistance level here with the ascending wedge. So this price has come up and up and up, found this resistance level, it comes down, it comes back up to the same resistance level. Difference is that the actual support level is kind of like an ascending line, just like what I talked in trend lines in the previous video, that the support levels are getting higher each time. So the bearish movement is having less impact each and every time it comes down. It then breaks through the resistance level and continues up. And again, the descending wedge we have is characterized, it's descending, it's bearish, we have this price drop, we have a very strong support level, but the resistance level here, the price is getting less each time. It just is a great indication that with the price getting lower and lower each time, that it's the long positions, the bulls, the price movement up is losing momentum every time. And inevitably, not inevitably, but it's just an indication of what could happen. At times, you may see a descending wedge and it comes up and it's like, okay, cool, this is a descending wedge. But then the price finds support and it goes shooting up through the resistance. As I say, with all of these chart patterns, just because you identify a chart pattern, it's not going to 100% of the times follow the pattern. It's just to help you understand what should be happening next. One thing that I've already mentioned, and you know, in the trading seminars that I do in our community, and one thing that I love to look at when trading are these double bottoms. You know, double bottoms, double tops. You can see here on the left, the price has come down. It's fine. It's found some support. It's come back up. It's come down to the same sort of level, but then this time it's really shot up past the previous high, which again just shows you that it's a bit of a trend reversal, a swing in the other direction. You can have a double bottom, you can have a triple bottom, and again, this is just for you identifying these support levels. The more times it bounces off and holds support there, the stronger it gets. Here we have the double top, which is a bearish signal because the price has been coming up, finds resistance, comes down. It tries again to push through, but it can't. So it not only comes down, but it actually comes down lower than the previous low. When it starts to hit new lows compared to previous lows, then again, you should be thinking, right, it's really lost this upwards momentum. It's starting to come down. Just to finish really, you know, for all of these, you're not going to see them as symmetrically beautiful. I'm going to go on to Binance to finish, but they're not always going to be as symmetrical and as clear as this. You know, you may see a flag that then turns into a wedge, but it's really just trying to help you get an understanding of where has the price come from? Is it bullish? Is it bearish? What is happening with the channel? What's happening with the support and resistance lines? The kind of battle between people opening long positions and short positions. So a head and shoulders, which is a bullish signal. You can see here the price has come down to a low, comes up to this neckline. It then reaches a new low, comes back up, and then the next low is higher than the previous low. So again, when you're looking at this, because it's not gone as low as before, and if it resembles this, then it is a very, very, very good signal that it will be coming back up. And the same applies for the, this is an inverse head and shoulders, and we have the head and shoulders here. Here's the shoulder, there's the head, there's the neckline. Quite a bearish signal. Okay, so what we're going to do now is go on to the Binance Futures platform, and I'm going to talk you through some of the chart patterns I'm seeing as I'm looking at the charts. So I'm on Bitcoin to USDT here on the 1 hour candles. Again, get used to switching between different candle lengths. But for these examples, I'll stick with 1 hour. So let's get a real feel for the coin and what's happening. You can see at this point, we've had a bit of a downtrend. It's come sideways and it's continued down. So we do actually have some bear flags that I want to highlight here. So let me just pull up a, there we go. You can see we've had this downwards trend there. And then the price has come across. So we have this downwards movement. The price is holding along this support level. And then it breaks through the supports, which is a continuation signal for a bear flag. It's continuing down. It's continued down. It comes back up a little bit. And then we have another start of a bear flag there. Oh, that's a little bit of a wonky line. Get used to using these tools. You have them on the side. It's going to help you visualize what you're looking at. And then again, we can see the support level that's being held at this point. So again, the price has come down. It's come across, it's holding. And then this time, it has not continued down. So even though this is looking like a bear flag and a continuation of the price coming down, it actually holds this support and continues up. You can see later on it then comes down to the same sort of support level. That are a couple examples there for you of bear flags. You can see where bear flag holds and the continuation signal is there. And then where it looks like it's going to continue down, but actually the support holds and then it comes back up. At the very top here, before we had this drop down, we have a double top, and it can be, just get used to looking for these M's and W's. So the double top there, the price has come up, it's come down a little bit, it's come up, to that same height before then dropping down and down and down. Before we had that double top, we had a nice bullish flag, nice characteristics of a bull flag. Well, the price is shot up. It's come sideways. Here is the channel. It's coming sideways. Some very clear support at this level. Some wicks coming through. Continuation pattern, and it's continued up again before this double top and coming back down. Let's zoom right back out. I just showed you that bull flag there again to show you when a bull flag doesn't follow suit. Here we have the bull flag. It had a huge spike up. We have this flag here, which I'll just show you. Here's the price action and this support that it was holding. It broke through, tried to come back up, and then dropped down again. And then we're going to come to here, and as I've just shown you the double top, well, this is a double bottom. We've had this price drop off. It's come up a bit. It's come down to this similar level. You can see this wick here, the price action coming back down to this level. Here's the W, and up the price goes again. So then, yeah, just looking along, I've just switched to 15-minute candles. And what do we have here? Well, we've had a price action coming up, up, up. You can see from this wick, the price has tried to come up. This is now acting as a shoulder level here. You can see from there. The price has come down. The price has then surged up. It's found a new high, which is good. It's a good sign of upwards momentum, the price continuing up before the price comes down around to this similar neckline, comes back up to this shoulder point there. And this high is lower than this previous high, this surge that it tried. So it just shows that the momentum is slowing down, and there could and should be a change in price direction, which indeed happened. Big drop off, came sideways, bit of a bearish flag, and then continued down. As you look at these patterns and formations that are happening time and time again, there is a double bottom and then up. You will see that sometimes you're looking at it and you have a bit of a bear flag or a bullish flag, which then can turn into a wedge or vice versa. They're not 100% symmetrically going to be perfect. You know, we have a bit of a bullish pennant here. Let's just show. Here's a nice bullish pennant. And over time, you can see the price drops. But then actually, this would then turn into a bit of a bull flag, because after this price surge up, the price has dropped. It's tried then and pushed up. And each high point is getting lower and lower and lower. So we have a bit of still a bull flag, which you may have been looking at as a bullish pennant to begin with. The price has dropped. Oh, is it going to continue down and down and down? No, it's coming back to this same support line that was held here. What does it do? It breaks through, as I've shown here, some support, and then continues up and up and up. This is a bit of a head and shoulders pattern here. We've had this nice price action up, this first high. You can see this wick here, so the price has dropped back down. It's come up. It's come back down to a similar sort of level, and it's come back up. This shoulder line, which is represented there. And then the price comes down. Just think of it as you are looking at this candle, and when you're coming to spot these chart patterns for yourself, again, it's getting a real feel for the coin. So you can see here that the price has gone up and up and up and up. It's got to a certain level. It's come down. It's tried to push up to a new level, which it has. But then on the next attempt, the high price is lower than the previous high price, which just shows the momentum is slowing down in that direction, and a possible reversal coming up, which it did. It had a huge drop off. What I discussed before about double bottoms and double tops, which I do love, you can see them time and time again. We have them in the shape of a W. The price has come down and hit a bottom. It's come up, it's come down. Pretty much the exact same here. That's the double bottom before then going up and up and up. And let's just continue to have a look. Again, this is a bit of a bearish flag. The price action shooting down. We then have a channel forming between the closing prices of the high and low. Now here, you can say this even carries all the way over. It has a little spurt out, continues in this channel, retraces, but then continues up. So then again, this I've just showed you a double bottom. This price action has surged up and up and up and up. It's come down. It's come up. This high again is not as high as this high. So you should be thinking, right, is this going to now start coming down? The price does come down, and then they attempt, through these positions being open, attempt to push this price back up, and we have a double top where it then continues back down. Let me just go now back to the PowerPoints. So I've just got a few slides that I prepped for you earlier, and these are just off 1 minute candles, just got off XRP. What can we see here? Well, you can see my face in the corner, which is always good, but just to the left hand side of me, we're looking at this area here. What do we think this is? Well, let me skip to the next slide. So what do we have here? We have a bit of a bear flag. The price has dropped and it's come across sideways. And just as I talked about with chart patterns, with candle patterns, sometimes you can have a bit of it's not always going to be to the exact Satoshi amount. But I would have identified this channel. It's bouncing between, top, double top, triple top, comes down and then breaks through. What do we see here? Well, again, we have a huge sell-off, which again should make you think bearish. The market, the price, the coin is coming down. We actually have a bit of a bearish pennant where this doesn't follow the candle pattern, stays within the bearish pennant region, and then actually breaks back up and continues up and up, and you can see it just goes up and up and up over the next couple of hours. Here, while we're looking at this middle part again with this price action coming up, you could say that we have a nice bull flag here, and you'd be right, yeah. Price up, it's come across, price up, and then it's a continuation signal, it continues up. But what I've identified here is a bit of a head and shoulders pattern for you. And you can see from the price action with these arrows, just to give you an idea of what I'm seeing there. And finally, what is this last one? Well, we have a bull flag, which again doesn't immediately follow suit. Again, we're only on 1 minute candles. Price does drop down a little bit, continues to go sideways, 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 which is the characteristics of this channel. We have a price surge up, the price is going sideways, 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 and you can see just above me on the corner of the screen, it then goes up and up and up. So that's chart patterns, and as I say, at times a flag will turn into a pennant. As you are looking, especially like this example here, as it goes sideways more and more and there's a bit more price fluctuation. The main thing is when you're coming on to these charts is the more you can try to understand it, the better. Charts tell a tale, and by learning to read them, you'll be able to get an indication of what could happen. What could happen. They're not a guarantee of what is going to happen. So that is chart patterns, and I'll see you in the next video where I'll be talking through the stochastic RSI.